Welcome back, everybody, to Markonomics 101 presents Hoot Loot, the place where you go to be informed, be amused, but never be misled. And today's show, June 12th, 2021, is going to be a great one. We're going to talk about a really confusing market, and this is going to be called A View from 50,000 Feet, the big picture. Now, before I go on too much, I want to talk about a little bit of the summary of what we've talked about over the last several weeks, and just we're going to go on to a different place. But I want to make some amendments first. Last week I said that if you wanted to get more, uh, less at risk, that margin accounts were not the place to be. You can still do margin. That's not a problem. It does not interfere with anything. The place where you really are at risk is any place where there's cash to be swept. And that's the place where you are. Now, I also want to make it clear, I'm not predicting that something like this is necessarily going to happen. I'm just saying it's now something that you should keep an eye on. So, on those nasty QR codes, like right there, are the most worst thing I've ever seen. Anyway, so I'm going to talk about the promotion we have going on, and this is between Le Metropole Cafe, Bill Murphy, the authoritative figure of precious metals, and we are offering a free subscription to Le Metropole Cafe. We'll pay for it. Just participate by being a subscriber here and a free trial subscriber there. That's pretty easy. It's no money for you. It's like the great source of information for precious metals. We'll pick up a couple of them for you, and if you donate, we'll pick up some of that too, and maybe we'll get some out there for everybody. We're going to have the drawing in about 3 weeks, so please like and subscribe, and we'll be right back with the charts. Welcome back, everybody. We're going to go through the charts here, and this is why I'm confused, and this is why most people should be confused. First, we start off with Bitcoin, which, as we've told you, Bitcoin bites back. There are too many questions about this thing, and I don't know what happened exactly last week, but it looks like that El Salvador's adopted Bitcoin as legal tender. Now, that is really significant, and I'll tell you why. Because China, in order to be a power, is going to have to get some kind of a reserve currency type of status. And the rumors have been that they plan to do that by way of a digital yuan. And I don't know whether that's going to happen or not. I don't know what they're going to do to try to make it happen, but it's logical for one superpower battling for position with another one to want to do that and want to get that little extra bit. So, that's what I wanted to say about why legal tender is important, is because if Bitcoin really is actually a made in the USA type of thing, like I suggested as possible, they might just want to insert Bitcoin in there. Who knows? But it's a good way to do it without actually admitting to anything. And boy, if you're in Washington D.C., boy, do you hate that. All right. So Tesla, once again, we want to look at it as a canary in the coal mine right now, and this one has led the market up, led the market down. Right now it's made a third little bounce off of the same 550 area, so this one's right on the cliff. I don't know if it breaks up or breaks down, but right here we're close, and this is one of those reasons I'm confused. Okay, Dow Jones Industrials, these are another one, and look at them, they keep going up, still an ascending wedge pattern. Look like they're curling over a little bit. And it's interesting if you look at some of the individual sectors and stocks, how much you get this or this or this. It's pretty amazing. Okay, NASDAQ 100. Thank God I don't have to eat crow right now, because I would not be able to take it. Whew, it barely just didn't make a new high. But, I might have to eat crow on Wednesday's show. You never know. I'm ready for it, but I hopefully not. But look at this. It's right up to a triple top again on the NASDAQ. And when I show you some of the individual stocks, they're all over the place. So this is the S&P 500, same thing. It looks ominous, but it's looked that way forever. It keeps going up, making new highs, slight new highs, slight new highs, slight new highs. So, we keep going here. The small cap index has made actually a new high, just barely though, and now back below it. So, I don't know. Again, it looks like it's on sort of like a teeter-totter, on the edge. The Dow Jones Transportation, now here's something that's curling over. Okay, transportations were pretty strong all the way and stayed strong, and all of a sudden now they're weak again. So we'll show you some of that too, and that's really an odd development. The U.S. dollar, here, I did another one. The dollar rallying, with all those dollars going flying around, and the dollar rallying. Look at that little green ellipse. It looks like it's actually made a little bit of a temporary bottom, but that could be because the euro is even worse. Okay, CRB index of commodities. Now we're going to talk about inflation. And there was a report last week, the CPI came out, and it came out 12 months annualized, or I'm sorry, 12 months year over year was 5.0%. That is the highest it has run in about 40 years. Okay, so we haven't seen anything like that in a while. And with that running at 5% year over year, the 10-year bond, its yield went down. It actually rallied, and it rallied below where we put supports. We're going to show you that in a minute. That's confusing. So who would have thunk it? And by the way, who thinks inflation is really 5% a year? I don't. I think it's like a 10, 12. I mean, what's important is what you pay, not what the government says, a basket of goods is. It's what you pay. I think I pay about 10, 12% more. I think everybody else does. So they, of course, want you to believe it's 2, but there we go. Crude oil is another reason. It's breaking out to new highs. It's above 70. So, a level that has held it in for a long time is now not holding it in. And I still think this is, again, a reaction to a lower value dollar. Okay, copper miners. Again, this thing may be a little bit of a counter trend correction here before rallying. I don't know. We'll have to see. But these things have been incredibly strong at 800% in a year. Oops. The agriculture fund, Invesco Agriculture Fund, food prices may be stalling. I don't know. I mean, everybody that's out there that's making comments, everybody wants everything to stall, be transitory, be transitional. Guys, sometimes you make mistakes and you screw everything up and it takes years to get over. Think about that, okay? I'm talking to Washington, D.C., not y'all. Okay, Invesco Base Metals Fund. This is a like an ETF or mutual fund that has like tin and lead and zinc and those kind of things in it. And look at that, just flying away. Everything's in short supply. That includes steel, iron, you name it. But now here's the interesting thing. Inflation is clearly going up. Even the CPI, which does not measure it in its totality, even that's at 5. And here we have 5-year Treasury bills now breaking down from support now at 75 basis points. We thought they'd hold 80. We thought they'd hold 70. I just don't get it, especially with inflationary expectations. I think they would be going up. So 10-year Treasury yields. Now look at these. Look at this thing. This thing broke down. And we put in a lower support line last week, and this thing broke down with higher inflation. Now the question is, who would pay? Or who would be capable of receiving 1.6 or 1.5, 1.45 on the 10-year treasuries when inflation is running at 10? Who would take that? Well, I have a good answer for you. I just found that out. It's intragovernmental spending. 1/4 of our total debt is held by Social Security and other arms of government like that. So they go out and keep interest rates low so they don't go bankrupt, and make sure that you, as someone that pays into the Social Security system, gets a worse return, and they get, I don't even know. Is that not confusing or what? We're lending it to ourselves at a low interest rate, which is stupid, and then we're the ones that are penalized twice for it. Once this way, once that way. So, here we go. Here's the 30 years. These also broke down, and I'm telling you, this is not a good sign right here. 2.15%. I just don't get it. I mean, this thing ought to be rallying. At least the yields are. So I am very confused about this, and I'm very confused how that inflationary news could possibly be looked at it like this and possibly have this reaction. I just don't know. We'll find out next week. The Fed has a meeting. Next week. I think they have one of their monthly or 6-week meetings about interest rates. So it'll be very interesting to see what they say. No inflation. We don't see a damn thing. No, we're not going to raise interest rates. I could just see it. Okay. This is the ultra short 20-year plus treasury, and this just shows how the ETF designed to mimic the behavior of the long bond has just broken down. There's another sign that rates are going lower. I don't know why, but they're going lower, at least for the moment. Gold is still at a 50% retracement area. I still can't understand why this thing hasn't rallied either. But silver too, although it's creeping up, and it's looking like this one may just get there. We'll see. And it's slightly tipping on the hand, but right here, everything is kind of like on the edge. So the Dow Jones REIT index, real estate is booming up. It's not in a bubble. It's the dollar is getting creamed, and rents are going up. And so the value of real estate is going up. And that's just all there is to it. And it has nothing to do with being in a bubble. It has nothing to do with anything. So now let's go on to the some of the stocks that are the mega cap stocks. And here we're going to take a picture out. We're going to zoom out a little bit. Apple, this is 5 years. This looks like a crummy pattern right here. You know, it could go either way, but it's going to do it fairly soon. And if it does break up, and it could, the NASDAQ, I'll be eating crow here on a show coming up pretty soon. So Amazon, same thing. It looks like it's in a sideways pattern here, like that would be just a flag, I guess. I don't even know if that wouldn't even be a bear flag anymore, just be a flag. So it could break up. You never know. It sat there for a year and still, doing pretty well in business, driven everybody out of competition. All right, back to Facebook here. Here again, you look at it for 5 years, and this thing has just gone all the way to $1 trillion in market cap. I may rant and rave about the owner and some of the practices of Facebook, but the guy deserves some credit, I guess. All right, so let's go back to now Google, same thing. Look at that, just screaming higher. And this is a kind of stock that's going to be helped by lower interest rates. Are we really getting lower rates in this environment? Jeez. Microsoft, look at that, racing to new highs, still a descending wedge, but helped by those lower rates. Nvidia, new high. This is now the new bellwether of semiconductors right here. This thing absolutely has gone screaming out there. It makes chips for cryptos and gaming and all that, high-speed chips. So, of course, everybody's in love with it now. And here's the bank index. The bank index is actually starting to curl over, which is interesting because what is happening is that short-term rates are not going up very much. In other words, they're around zero. They went up to about 20 basis points. So they kind of went up. But the long side, the 10 to 30s, the 5 to 30s all went down. So the yield curve, which is normally upward sloping like that, became downward, not downward sloping, but it began to flatten is what it's called. Flattening is when it's not as steep. And it flattened in the direction that is normally associated with lower economic activity, which is flattening, although it really hasn't predicted that yet. And I don't want to make that seem that way. All right, broker-dealer index, again, another ascending wedge. It looks like it's going to go forever, and so, we don't know. I mean, right now, next week could end up being a boom week, could end up being a bust week. We just don't know yet. JP Morgan, the bellwether of the banks and financials, and there you go, right up to a, it's kind of come down a little bit with the bank index. We'll see. I mean, if rates do go down, I'd expect this to go down, especially if they flatten like the way they're doing it, because that's not good for a bank, period. Discover Financial, a credit card company, continues to soar up. Most of the credit card companies are still strong. I guess the consumer is very happy to be spending and on debt and have lots of little expectations and more stimulus checks. Where are my stimulus checks? Okay, Caterpillar Tractor. Now this one has just blown apart in the last few days. All the infrastructure plays, Caterpillar, Dow, Triple M, these were all just flying high. And Caterpillar was the first one to break, which is why I put it in here, just to kind of show you that some things are kind of cracking on the surface, making it seem confusing. The airline index also turning down, one of the reasons that the transportation index is turning down. FedEx, and here again, they transport goods to all across the country. They're getting higher margins because their logistics are critical now to breaking all the bottlenecks and supply chain disasters and all that. So it's kind of come back down, but still an important company here, as is UPS, and it's come back down too. So I don't know whether we're starting to see actually the first signs of the economy just having surged on the stimulus check and then coming right back and doing a 180. I don't know. We'll have to see next week. But the interest rate picture would say yes. Some of the other pictures would say yes. I just don't know. So we're going to see about that. And there's a couple of the our old favorites. AMC Entertainment Holdings. This is the short squeeze, the Reddit short squeeze from a few months ago. But look at this thing; it's still going up. This is only a few weeks worth of trading right here, and this thing is going all the way through the roof. And they sure still don't have the earnings to show it. So that's kind of interesting how market supply and demand dynamics can just cause incredible things. And here's GameStop for you. Look at that. I mean, it's another one that's just it actually came out of a pattern exactly the way it should have been, broke up, and then hit resistance, came back down. I don't know what the hell to say about it all, except this. I'm going to show you something really cool right here. These are Hoot coins. You get your own coming up here. See, from our art director Katie Devsich, and she has also come up with a neat keychain with a little Hoot on it right there. See that right there? You can also use it if you're into certain things and whip somebody to death. But we won't talk about that. And here's another one right here. Look at that. It's a little bracelet type of thing. So we're going to start filling up the, the new website and all that with really neat tchotchkes. And I wanted to say thank you very much for tuning in, and we look forward to seeing you next time. And please like and subscribe. Please don't forget to check out Bill Murphy's Le Metropole Cafe. We'll have some instructions on that, and www.gata.org. And we will see you next time. Thank you.